Hey everybody, this is Christopher K. Smith. Welcome to my video. This video should last about 15 to 20 minutes. We'll give you an introduction to FibLines indicator. It's a little bit about me. I'm a blogger. I'm an author of the blog fxmon.blogspot.com. I've been running for about 5 years now. I'm also an IT professional. I've been working for major financial firms for about the past 25 years. I'm also a big fan of the stock market, financial markets as a way to build wealth. And in all my years of looking at stock markets, the most exciting thing I've found is the FibLines indicator. So this video to the FibLines indicator and introduce the Fibonacci in the markets and show you how to draw the FibLines by yourself, explain why I think the FibLines work, how they help in making trading decisions, and some next steps. So first thing is Fibonacci. FibLines is based on Fibonacci, which is named after a 13th century mathematician named Leonardo da Pisa, better known as Fibonacci. And he observed a sequence of numbers that appear all the time in nature that he first observed in counting how many rabbits you'd have after n months if each each pair produced a new rabbit each month, and the rabbits were productive after the first month. So just looking at the sequence here, by some miracle, you had two rabbits, a male and a female, right here. They had one baby. It was a female. Now you had 3 rabbits. Now you have 1 male and 2 females, and they get busy. And each female has 1 more baby, and then you have 5 rabbits, and so on up the scale. So this is called the Fibonacci sequence, and it's very famous, and you'll see it all over nature. The thing that's important about Fibonacci is not the numbers themselves, but the ratio. So you'll notice that first, each number in the sequence is the sum of the prior 2. So 5 is the sum of 2 and 3, 8 is the sum of 5 and 3, 13 is the sum of 8 and 5, etc. And also, you'll notice that the ratio of the lower number to the higher number approaches is 0.168, and the ratio of the higher number to the lower number approaches 1.618, the mathematical inverse of 0.618. This is called the golden ratio, and it appears all over nature, and it turns out all over the stock market as well. So here's some examples of Fibonacci in nature. The shape of a conch shell or a spiral shell follows the Fibonacci sequence. And the sequence also is found in the spin of hurricanes, and also at the largest level, the spin is also found in the spiral spin of the galaxies, like the Milky Way galaxy that we all live in. So this is an example of what they call a fractal pattern in nature. It's a pattern that appears at multiple time levels, at the smallest level and also at the largest level. Also, Fibonacci sequence is found all over nature. For example, the number of branches you have in a tree. You have 1 branch, you have 2, you have 3, 5, and so the sequence really appears, like I said, all over nature and all over the markets in itself. And I think it works in some way because the universe is kind of expansionary by nature. It expands. Okay, so the other thing you have to know about Fibonacci, about the FibLines indicator, is Elliott waves. Elliott wave is named after this gentleman, Ralph Nelson Elliott, who observed that the stock market has an 8-wave structure that appears over and over, again, at fractals at different levels. And it's 5 waves up, 1, 2, 3, 4, 5, followed by 3 waves down, an ABC corrective pattern. You don't need to know a lot about Elliott wave for the FibLines, but you do need to know that wave 1, the only rule that's really important for FibLines is wave 1 has to have some type of pullback after it right here. So it turns out Elliott wave's not really that useful for predicting the stock market because there's just so many different ways to interpret it. But it is very helpful for the FibLines indicator. So the aha moment, when you really realize what it's about, is that you realize the stock market unfolds in multiples of the Fibonacci sequence according to a first defined move that you can think of as Elliott wave 1. So the numbers in the Fib sequence are built into the Fibonacci retracements tool inside of Thinkorswim and most other charting platforms. And the sequences are 100, 1.618, 2.618, 4.263. Again, it's the Fibonacci sequence where each number is the sum of the prior 2. Okay, so let's take a look at some examples of Thinkorswim. You see what this has to do with the stock market. So let's take a look at Facebook, which is one of my favorite stocks. And Facebook came public back in May of 2012, and it was a fairly disastrous IPO in the sense that it was twice as big as it should have been. The price was too high, so the investment bankers made a lot of money on it. There was also some trading glitches where the execution of the IPO did not go well. Stock traded down, came down, did a little ABC corrective pattern, and then had a bit of a rally up, followed by a decline that was at least as long as the rally. So the first step in the FibLines indicator is to take a Fibonacci retracements tool that looks like this little percent mark here, and you go back to your chart and you draw a line from the top of the wave 1, to the bottom, which I'll define as this sequence right here. And you'll notice a few things right away when I do that. One is that prices, when they made this gap after earnings here, came right to the top of that 100% line. Also notice that price came up to this 161 level and hesitated a little bit, and then pulled back to that level. And then the same thing happened with the 261 level. Prices ran up to the 261, got deflected back to the 161 level, rallied back up to 261, held for a while, moved back up to the 423, and got deflected back down where they kind of hung around for a while at this 261 line. So you may look at that and say, well, you picked that example because you predicted the past with 100% hindsight. And that's a fair argument, but I'll show you in the future. I'll show you a little bit later how I'll come up with the next set of predictions for Facebook, because this one seems to have run its course. So once you've drawn the initial lines, you go into the properties of the drawing, and you're going to uncheck all the boxes except for the 0, the 1.0, 1.61, 2.61, and 4. I'm going to leave those at red color. And next, you're going to go in and subdivide each one of the remaining regions between 161 and 100. First, you're going to draw another Fibonacci tool in there, and you're going to uncheck everything except for the 3.82 and the 618, and you're going to make those orange. Some other people like to use green for this level. I'm going to stick with orange. Okay, now we're going to divide the 261 and the 161 with another fib tool. Again, make those orange. And finally, the same thing for the 423 down to the 261. Okay, so once you've done that, you have the basic FibLine sequence with 2 levels of numbers, 2 levels of lines. There's also a third level where you could go in and divide each one of these subsections, again, by the 382 and the 618, and you're going to make those lines gray. So that's the guts of how the tool is created, how the indicator is created. A couple cool things you'll notice here. One is that the lines are the same in all time frames. You could go to a weekly chart, you could go to an intraday chart, 4-hour chart, and the lines will stay constant regardless of the time frame of the chart that you view. And that's a nice advantage compared to some other indicators like TTM squeeze, moving averages, et cetera, that all have different interpretations based on different time frames. The other thing you'll notice is that price eventually gets to this 423 level, and and something happens. The lines don't work anymore. They need to be reinterpreted. So we'll talk about that in a moment. So let's go back and look at some of the finer points here. The first thing is that you want to use candlestick charts, and you want to use the high and low of the candle body when drawing the line. So let's go back here and zoom in on this beginning of the sequence here. What you would use is, this is a weekly chart. Let's go back to the daily. You would use the candle real body. So let's just remove all these drawings for now. And when you draw the levels, you want to use the higher of the candle body. In other words, let me just get this going here. Okay, so for the high, you're going to use the higher of the lower of the high. So this was an up bar. So we're going to put our cursor on close. On the bottom, you want to find the lower of the high of the low. So this is a down bar, so we're going to use the opening value, the closing value. So you want to use the lower of the open or the close at the bottom, and you want to use the higher of the open or the close at the top. So that's the first fine point in making the calculations. Second one is, it can be difficult to find a pattern that works. If it can't find it, get creative. Also works on the way down, as we'll see a little bit further along. Okay, so when does it end? Well, the sequence could easily continue remember it's the sum of the prior two numbers. So after 4.23 comes 6.854. After that comes 11.09 and then 17.94. So why do we end at 4.23? Well, if you think about it, this top of the Elliott wave 1 essentially represents 100, or equivalent to the first initial move. And by the time the stock's gone through this entire sequence, it's made a 423% move from the top of the first move. So when you think about it, how many people are going to hold on to a stock after it's made a 423% move from the bottom? Not many, it turns out, or at least after that period, after that move, there is some period of consolidation that's required. So let's. So what happens when the numbers, when the sequence runs its course? Well, getting back to Facebook, we saw that we reached the 423 line back here, kind of moved sideways for a while. What you need to do at that point is remove the drawing, come up with a larger level interpretation, kind of move up to the next higher level. Remember, it's a fractal pattern, so it appears. So in my interpretation, I chose this was the top of Elliott wave 1, and all the way down to here, which was the bottom. So once you do that, you'll notice you have a different set of lines that will give you a different set of predictions that now will allow you to move forward into the future. So while my previous prediction was sort of backward looking, well, now we have forward looking. We can see where the lines are going forward into the future. So that's where the predictive power of the lines come in. And you'll see some amazing things. For example, at the top of this 100 level, we moved up again to about the 161, came back on that nasty sell-off back in late August, exactly to the 100 line there. So a lot of those inner symmetries come out when you use this indicator. And also, you might look at this and say, well, you know what? Why did you decide to make this the top of Elliott wave? Couldn't you have used this level right here? Well, of course you could have. So if we do that, let's go back to the fib lines, go back to the Fibonacci retracements, I should say. If you decided to make this a top of Elliott wave, how about you decide to make this a top of Elliott wave 1? I'll drag down and you'll see, and it's almost uncanny that a lot of the lines are in the same places. The 161 is about the same as the 100, the 261 is the same as the 161. So the point is there's different interpretations of these, and not every interpretation is wrong or right. And I'm working on a method to determine which interpretation is better or worse than the other going forward. So, but the point is there's human interpretation involved in setting these levels. And of course, it's a pain to draw those levels. So if you use my FibLines indicator, all the levels are drawn for you, along with the three different levels: the red, the orange, and the gray. I like to use those with the LBR paint bars and the TTM squeeze. Now you can see the full set of FibLines for Facebook. Okay, I mentioned that FibLines also work in reverse. Let's take a look at crude oil. This is a good example of a market going in the southward direction. So here's the top of and bottom of Elliott wave 1 undefined, except in this case the wave goes down rather than moving up. You'll see the price is pretty much sliced through the 161 and 261s, came back, got deflected off the orange line twice, ran back up to the 261 line, and kind of moved sideways for a while. So the levels do work on the way down, but I feel generally they're a little more effective on the way up. Okay, so frequently asked questions. Who's the intended user of FibLines? Well, it would be active traders and investors, not so much for buy and hold type of traders, although it could be used to take profits or decide when to add to a position. FibLines is not a trading system. It is a tool used to help in trading decisions. Is FibLines a holy grail? Well, it's not. It's the closest thing to holy grail I've found in terms of uncovering hidden areas of support and resistance. How does FibLines help in trading? Well, first it gives you an idea where a stock is in the life cycle. There's some parallels between a stock and trees. So sometimes the acorn grows into the mighty oak. Sometimes the stock will go up and kind of languish and do nothing. So by understanding where the stock is in the sequence between the 100, 161, the 261, and the 423, you get a sense of where the stock is in the life cycle. Is it early? Is it middle? Is it up to the 423 line and ready for a break? Secondly, it gives you a place to take profits or add to positions, and I've used this many times with success. I know it works. It also prevents you from buying exactly at the top or selling at the bottom. And in my case, sometimes I look at charts, and when they look absolutely the best is when the time that you should be taking profits. So the FibLines also puts that perspective out there, prevents you from buying at the top or selling at the bottom. sometimes. Okay, so how do FibLines work, or why do they work? I believe they work because the markets are made of people, and while individual people might have their own reasons for acting, on the whole, the people in groups act in repeatable patterns, and that pattern is dictated by the Fibonacci sequence and these retracement levels. Another way of looking at it is how much price move does it take to make you into a seller? So that's really what the heart of FibLines are. It is, think of each stock symbol or market as having a built-in quantity, a built-in constant, which represents the amount of move that happened before a retracement came in. And then once you know what that quantity is and the beginning and end of that quantity, you can calculate or project future support and resistance levels in the future. So in terms of does it work better on some symbols than others, I believe it works better on stocks that are new, that are kind of fresh out of the gate, where you have a bunch of participants coming in for the first time. And I don't think it works as well in symbols that have been out for a long time and have people coming in and out and whatnot. So the other thing is you might come across a chart like ADP. It's a company that's been out there for a long time, very successful. Had a long rally for many, many, many months and years. And if you try to draw the fib lines, you'll notice they end, you keep hitting the 423% level. So how do you deal with that? Well, if you come up against a situation where the stock moves sideways for a while, you can consider that the bottom of Elliott wave 1 and start a new sequence. In this case, the sequence ran the entire 423%, pulled back, and is now kind of digesting some moves here in a shorter time frame. So the indicator does work on indexes and futures. I've calculated it for the Dow, the S&P, QQQ, and pretty much all the major markets. And I have interpretations for all those, but I found it does work better on individual stocks. So next steps is right now the FibLines indicator is free for the major indexes, SPY, IWM, QQQ, and the cash futures, your YM and your ES. And there will be a new paid version coming out in early 2016, and paid because the indicator itself is just some code, but the real work involved in the indicator is coming up with the lines, coming up with the levels. So it has to be done by hand for each individual chart. So you need to look at each chart and find the beginning and end of Elliott wave 1, and it's a lot of work. So I've done it for Dow 30 stocks, major indexes, major futures, S&P, the Dow 30 and the NASDAQ 100, which are the major tradable stocks. And it's a lot of work, but it's also very helpful, I found, in trading. So for now, the indicator is free. If you want to get it, you can send an email to fxmon@yahoo.com. There will be a paid version coming out in early 2016. It will be very reasonably priced, so we can make this work available to everyone who would like to benefit from it. So thanks very much for watching the video. Have a great day, and good luck with your trading.